My question for Charlie is, in a business school sense, what is the cost of capital for Berkshire Hathaway? And my question for Warren is that I've been on the internet and I look at Yahoo and they give you recommendations for companies. And when I search for Berkshire Hathaway, it shows that nobody is recommending Berkshire Hathaway, despite the fact that there are maybe 1,000 people that are wearing signs here. I love Berkshire Hathaway, and of course I've got mine on too, but what seems to be the problem in lack of recommendations?
Well, we're not recommending Yahoo, incidentally, either, but but I'll let Charlie have that first question about the cost of capital, which has puzzled people for thousands of years, and then
the way that is taught in most business schools now, I find incoherent, and so I'm the one that asks that question and gets the incoherent answers. I don't have a good answer to a question I consider kind of a stupid question. What is the cost of capital at Berkshire Hathaway when we keep drowning in this torrent of cash which we have to reinvest?
There's really only two questions that get to that, but you don't need a mathematical answer. The first question is when you have capital, is it better to keep it or return it to shareholders? It's better to return it to shareholders when you cannot create more than $1 of value with that capital. That's test number one. And if you pass that threshold that you think you can achieve more than $1 of value for every dollar retained, then you simply look around for the thing that you feel the surest about and that promises the greatest return weighted for that certainty. So our cost of capital is, in effect, is measured by the ability to create more than $1 of value for every dollar retained. If we're keeping dollar bills that are worth more in your hands than in our hands, then we've exceeded the cost of capital as far as I'm concerned. And once we think we can do that, then the question is how do we do it to the best of our ability? And frankly, all of the stuff I see in business schools, and I've not found any way to improve on that formula. Now, the trouble that you may have is that many managements would be reluctant to distribute money to shareholders, even if they would rationalize that they would do better than they then actually do. But that may be a danger on it, but that won't be solved by them hiring a bunch of people to come up with some cost of capital that also justifies them keeping the money, because that's what they'll do otherwise. The question about recommending the stock, we've very seldom had stock recommendations over the years. As I think back to 1965, I can't think of a lot of brokerage reports that have recommended Berkshire. I'm not looking for any, reports at all. We are not looking to have Berkshire sell at the highest possible price, and we're not looking to try and attract people to Berkshire who are buying stocks because somebody else recommends them to them. We prefer people who figure out for themselves why they themselves want to buy Berkshire, because they're much more likely to stick around if they enter the restaurant because they decide it's the restaurant they want to eat at than if somebody has touted them on it. And that's our approach. So we do nothing to encourage, but I think even if we did, we probably wouldn't generate a lot of recommendations. It's not a great stock to get rich on if you're a broker.
Yeah, I think the reason one of the main reasons why it's so little recommended in the institutional market is that it's perceived as hard to buy in quantity.
We prefer, we've got some good institutions as holders, including one that's run by a very good friend of ours, but frankly it's more fun for us to have a bunch of individual shareholders. I mean, you see it translates, if there's money made, it translates into changes in people's lives and not some change in somebody's performance figure for one quarter. And we think that individuals are much more likely to join us with the idea of staying with us for as long as we stay around. And that's the way we look at the business. Very few institutions look at investments that way, and frankly, we think they're often less rational holders than we get with individuals.